Okay, so we did this last week, and it seemed to work quite well when I was asked to just look at markets. So if you'd like to ask me to look at a market, we can try that again this week. If not, I'll try and choose one and see how we get on. But if anyone's got any specific markets they would like me to have a go at, I'm happy to do so. This is gold up there at the moment. Aussie dollar. Okay, let's have a look at the Aussie dollar. That isn't one that I usually follow, so you'll have to bear with me. Just let me find the code. Okay, here we go. Well, thanks for joining me while the Aussie dollar uploads. Hang on. Here we go. So I always start with the weekly chart, just to give me an idea of the bigger picture. Hopefully you can see that now. This should be the weekly chart. Clearly since 2009 it's been in a nice uptrend, and basically we've just gone sideways, and the ranges have really been narrowing, so we'll just, trend line isn't very clear. Let me put some colour on it. Okay, so that gives us an idea of what's going on. The range has been narrowing since middle of 2011. We've managed to test the upper end of that trend line. Where do we see the time frame here? That says weekly. So I'm looking at the weekly chart at the moment, and then I'll move on to the daily chart in a minute. Oh, why has that gone back to white? Okay. So yeah, we managed to, let me just open that up a bit. Beginning of the year, we tested that trend line, which is now, let me see, just over a year and a half old. And although we pierced it, on a weekly basis, we certainly didn't close above it. So that has led to prices dropping off a little bit. We draw a trend line here. Okay, so we've managed to just hold above this little trend line there. Moving averages aren't really telling us anything. They've been going pretty much sideways, which is hardly surprising when the market's been going sideways for a year and a half and the range has been narrowing. So not much to say on the weekly chart other than, if anything, we're probably going a bit lower. The slow stochastics, which I like to just keep an eye on, starting to get oversold. Nothing too drastic, so there is still room to move lower, although this week we've certainly seen a good bounce. I'm going to now switch on to the daily chart. Okay, so that looks quite interesting. Okay, so we get quite oversold on the daily chart, and you see here how when the market bottomed here, which was sort of end of Jan, beginning of Feb, we got very oversold on the stochastics. We then had a little bounce and then took another big tumble. And the low here on this low stochastic is actually higher than this one, which is divergent, and some people would say that that's a slightly bullish indicator. Anyway, needless to say, we've had a bounce off there. So I always like to throw some Fibonacci's on there to see where we've got to. Okay, so this is a good little downtrend which has been going since around mid-Jan. So we'd say, what, 6-7 weeks? We've had a bounce. You can see this as almost exactly the 38.2% Fibonacci retracement, which was 103.00. The high of that move was 103.02. Couldn't be any closer. The fact that we've now rejected that says to me that we're still in a downtrend. Always wise to stick with the trend. We'll put on a trend line here. So we've managed to pierce that trend line today, in fact, but we're certainly back below it at the moment. We'll have to see what happens at 102.29, which is this Fibonacci support level, and that also coincides quite nicely with the low here on the 12th of February. the low here on the 21st of February and the low here on the 22nd of February. So you've got three lows all around this 102.29 area, which just adds to the significance of that level. I'm just seeing, oh look, I've got some Fibonacci's on here from looking at it previously. Let me stick those back on because that actually seems to coincide nicely as well. Okay, so the up move that started end of May took us all the way up to 106.25. It topped out here around September the 14th, and we have just tested that 50% line at 101.03. The actual low was 101.15, so within a few cents. That could be one reason why we bounced from that level. Good Fibonacci support. We managed to get above 102.29, but this is a very short-term daily Fibonacci level, but it's also a slightly longer-term Fibonacci level as well, which I like when these Fibonacci's coincide. I think people call that confluence or something, but that gives me more confidence in that level. You tend to find when levels overlap, they certainly are stronger, and I mean there's an obvious reason for that. Different traders look at different time frames. If you've got traders that are trading different time frames and the same level is coming onto their radar, then of course you're going to have different traders on different time frames trading the same level, and therefore that tends to work a lot better, and I tend to put emphasis on levels such as that. But anyway, we've managed to get through that on this bounce yesterday, hit the 103.00 Fibonacci retracement. My best guess is that we might come down here and test that 102.29, 27 area. As I say, we've got these three lows here. Let me just open that up a bit so it's more clear. We've got the three lows here, so you can see that level did work quite nicely in February. So if we hold above 102.29, 102.27, then we can have another go at this trend line. Maybe a close above it would be certainly more bullish. Then we've got to tackle the 103.00 Fibonacci, which is so far today's high. A close above there again would be bullish, and I would imagine we'll start heading up to this band here. We've got the 50% fib at 103.57, and that slightly longer term one at 103.79. So 103.57, 103.79 would be the target if we can get above 103.00. That ties in fairly nicely with the 200-day moving average at 103.45. That's just slightly lower, but it also ties in with these three highs here you see, which is 14th of February, 15th of February, and 20th of February. And also, it actually ties in quite nicely with these lows here, you can see. So really, this band should be a struggle. 103.57, 103.79. My best guess is that we could make it up there, especially, I mean, if we held above 102.29, 27, we could then push on through 103.00. I don't see us getting through here on the first attempt, at least. I would imagine we would pull back a little bit, and then we'll just have to see what happens from there. If we can't hold above 102.20, you're going to be heading back towards these lows at 101.84, 101.82, and if that doesn't hold, then I'm guessing my best guess would be back to retest these lows and hope that it holds there. I'll just have a quick look at the shorter term chart, which is the 4 hour. 4 hours is usually about the short term as I go. Okay, this is kind of interesting. Obviously we've been in a downtrend, needless to say. If I open this up a little bit, you can see what would be a head and shoulders pattern if we were the inverse head and shoulders pattern, I should say. This would be the left shoulder, the head, and this could be forming a right shoulder. So if we were to fail and come back down, the 61.8% retracement level is 101.86. Now this would work quite nicely as an inverse head and shoulders if we failed here. You can see the 4 hour stochastic is actually very overbought and has just turned negative. So there is a good chance that we come back down here to 102.08 or 101.86, somewhere within this band. I would hope that 101.86 would hold. By that time we should be pretty oversold on the 4 hour chart, probably turning like we did here on this low. around when it turned at 101.15. I'm imagining we'd see something like that around here in a few days, towards the end of the week, beginning of next week, if we came back to this level. Probably would be worth trying a long position there, in the hope that that's the left shoulder, that's the head, that's the right shoulder, and then we bounce off there. We'll probably stall around the neckline for a little bit, maybe even come back to 102.57, but then once we get a close above 10, whatever this trend line is, 103.10, then we would be off and running. That would be quite a nice bullish signal. You take the low, let's take this one, 103.02 minus the low, 101.15, so near enough 2 full points. So your target would be around 105. Let's just go back to the daily chart for some Fibonacci confirmation of that. Well, actually 105 would take us almost back up to the previous highs. Certainly take us up to the 78.6% retracement level. So that's something to look out for. Let's keep an eye on this. Let's see if it pulls back here. Let's see if it bottoms out and starts turning higher again. That would be a nice inverse head and shoulders. A break above the neckline, as I say, should see us on the way to 105. That's probably enough of that, unless there's any more questions on that market. I do mean inverted head and shoulders. I don't know whether I said that or not. Okay. Shall we have a look at the... Yeah, the Aussie is coming off. You're right. So this might be playing out just as we said. Early days yet, but yeah, it's coming lower. So this 102.08, 101.86 area is definitely somewhere we've got to look for support. It'll take a couple of days to play out there, but so far so good. It's coming off quite hard actually. Okay, we might as well have a look at the euro then. That's coming off. Remind me, I'll come back to that Aussie at the end of this session and see what it's doing. Can I show the head and shoulders again? Yeah, the inverse head and shoulders, sure. Let me just flick back to the Aussie. Okay, that was on the 4-hour chart. That was the clearest place to see it. Hang on, give me a few seconds to update. That's the euro you're looking at the moment. Why is it not updating? Here we go. Okay, 4-hour chart. Aussie dollar. If I open this up a little bit, that's your inverse head and shoulders on the 4-hour chart. So you've had a downtrend. We've bottomed here. We've headed up. We've continued lower. So we're still in a downtrend. That's the head. Now here, this is our first indication of a potential head and shoulders, inverse head and shoulders pattern, because this peak is above the last peak. So you're starting to think, hang on, what's going on here? We've broken above. Let me stick a trend line in. We've broken out of the downtrend, so you're starting to wonder what's going on here. So far we're holding this downtrend, which is quite interesting. That trend line's quite useful. If we come back below the trend line, as we might do, judging by the stochastics, then this is where you'll start looking for that inverse head and shoulders pattern. Shoulder, head, and then inverse shoulder, and then that's your neckline. This is the important bit. It's only when you break above that neckline that you've got confirmation of the pattern. Do you ever trade short term? Yeah, I trade very short term sometimes. It depends on what setups there are. What about a potential bounce from the 102.40, which would be around here? Yeah, definitely. That could definitely happen. we could retrace only 38.2%, which is 102.30, which would be just dipping back below that trend line I've drawn. It wouldn't be a huge dip below that, and we could bounce off there, and that would still, in my book, count as an inverse head and shoulders. The right shoulder would be above the left shoulder, which would actually be quite a bullish signal, and then you'd be looking for it to get back above this downtrend line, and then the next target would be the neckline, and once you break above that, then you could, if you were already long, you could add to longs, looking for a nice move. Okay, I think we were going to have a look at the euro, so let me flick onto that one because that seems to be moving around a little bit. Okay, weekly euro chart. I think we only need to go back to 2011. Obviously been in a downtrend. We broke above it. We had a look at this last week, didn't we? We couldn't hold above the 200-day moving average. The failure to get to the 61.8% was an indication that there was some weakness coming. Then we closed below the 200-day moving average. We couldn't, the next week we couldn't, sorry, that's the 200-week moving average. We're looking at the weekly chart. And then once we broke below here, we couldn't get back above this trend line, which goes back to July, end of July, so that's about a 6-month trend line. So we basically had a nice recovery from this, what would you say, year-long downtrend. Nice recovery, but not enough to even get as far as the 61.8% retracement level. We started to come down. We look at the daily chart, which shows the uptrend we've had for 6 months or so. The 9-day crossed the 21-day moving average here, just as we had that big down day, which was 14th of February. Then we managed to break and close below that trend line, and as you see, we never really got back above it. A couple of days after we closed below it, we tried to get back above, but this Fibonacci level here, 133.10, just held it perfectly. We've now got, look, 21-day moving average crossing over the 55-day moving average, further bearish confirmation. We've closed below the 100-day moving average here, if you can see it, 131.28. We've failed to get above that in the last few sessions. Now we can't even get back above the 9-day moving average. We've got this Fibonacci at 130.63. That's held the last 2 days. That's just drawing from this last low up to the high at 137.11. And you can see I've drawn a fib here previously, which was the start of the rally up until the high, and then I did the second leg of the rally up until the high. And these again, they overlap really nicely with 130.63, 130.74 holding the rally of the last 2 days now. So it's really not looking good. We are very oversold, but that alone is not really a reason to buy it. I'd be looking for a reason to buy it. In fact, one of my clients asked me about the euro, and I said it's really oversold and I'm looking for a reason to buy it, but I just can't see it, and I still can't see it. I mean, the failure to get through 130.63.74 is telling me we retest the lows at 129.67. I don't see that as a massive support level. I'm not 100% sure why we bottomed there. But I wouldn't be at all surprised to see us break below that 129.67 and then head down towards here, which is quite good support, 128.77, 128.80 area. I'm guessing that is where we're going to head for. Just below here you've got the 200-day moving average at 128.51, so to me that looks like a logical target. There's good support there. You can see just along this line here that there's, we had some lows here, we've got some lows here, so that looks like decent support. We are very oversold. I think the first time we hit that level, we'll probably see a bounce. Let's go to a shorter term chart here. This is the 4-hour. The 4-hour shows these Fibonacci levels more clearly. So just looking at the recent downtrend, which started at the beginning of February, very clear downtrend. Stick a trend line on there, that's always useful. Oh, we'll use that one that's already there. Get rid of that. Okay, so we're in a really clear downtrend channel. You can see between these two red trend lines. We got close to testing that trend line today, was it? Looks like it's today. The Fibonacci's I've taken from the top of the move to the bottom of the move. That's obvious. The last leg of the move started here at 134.32, so I've stuck another fib on there. Again, they overlapped. I would have said if we'd got as far as 131.45 that would have held the move. We didn't even get that far. We only got to the first Fibonacci retracement target, which was the 23.6% at 130.77. Look how that held. Held yesterday, held today, coincides with the trend line. We've collapsed from there. We're heading right back to that 129.67 level. We'll probably see that in a few minutes at this rate. I don't really see us holding it, to be honest. I think there's a risk that breaks lower. We'll come back to that one later as well, maybe, and see if it does break lower. And if it does, don't forget, I think we're probably heading for 128.80, maybe even 128.50 before we find support again. We'll definitely do gold. We'll definitely do GBP. Do I trade indices? I do trade indices. I do trade S&Ps. And to be honest, I'll tell you, we'll have a look at it because I've got it wrong lately. And I'll show you why I got it wrong. Okay, so S&Ps. This is the weekly chart. I don't need to tell you that we've been in a massive uptrend since 2009. There you go. We're now just breaking above that last trend. This is the weekly chart. We've just broken above there, which I didn't think we would. I really thought that trend line would hold because we're very overbought on the weekly stochastics, because we've had a massive run. But if you look at the daily chart, this is what worried me. We had a key reversal day, a huge key reversal day in February, end of February 20th it was. We had a big up day where we hit 15.29. The next day we hit 15.30, so we made a new high, and then we collapsed back down to 15.06 and took out 1, 2, 3, 4, 5, 6, 7, almost 7 days worth of trading. That's a key reversal day, a new high and a lower close, and that to me, I thought signalled the end of that of a long bull run. We continued low, which I did expect. We got another key reversal day here where we made a new, not quite a key reversal because we didn't make a new high for the move, but we certainly had a higher high than the day before and a big lower close. And to me, these two big red candles were telling me it's over. I wasn't surprised to see it move back up to 15.30. We got to 15.24 and topped, and I thought that was it. 15.24, 15.25, that's a good recovery. It was the same high as the 25th of February. And I really thought we were going to fall from there. Anyway, we continued higher, so I thought, okay, here we go, we're going to test a 15.30 high, but I really didn't see us breaking it. Anyway, we did. So you had to have a stop in at 15.32, because it was clear that if we broke 15.30, we were going to keep going. So yesterday I was stopped out, and we have continued higher. Now with the S&P, really, you can't fight the trend. We were making new highs. If I go back to 2007, it's the all-time high is 1586. We had a high in the year 2000 at 1574, which I should be able to show you here. Here we go, that high here in the year 2000, the first crash. We had, the high was 1574, yeah. Then we managed to rally all the way back up. We hit 1586 in 2007, and then we collapsed. I think that's where we're going now, 1574, 1586. We've got to test those highs, see what happens there. Whether we break higher from there, I have no idea, but you can't fight this uptrend. we're trading around 1540 area, so we've got 30, 40 points to go before we test there. We're so close that I think traders will push it up there and give it a go. You shorted at 1524 and you got stopped out also. Well, that's pretty much exactly what I did. In fact, I think I started getting short even before 1524, so that was a painful day for me yesterday. But, when you're wrong, you're wrong. It was worth it. I would do the same trade again. If the same setup came, I would do the same trade again. Those are things you just got to trade, and sometimes you're right, sometimes you're wrong. In this case, I was wrong. Gold. Let's have a look at gold. Yeah, we were getting around 1580. I'm looking for 1574, 1580. It's such a massive resistance. You've got to try it. It's 2 yearly resistances, and if it fails there, it will come down very quickly. So yeah, you're right. We have to try it. Let's hope we make our money back on that trade. Gold. Right, this is the weekly chart for gold. Risk reward is worth it. You're right. That's why I'll do it again. Hopefully I won't lose money again. But you're right. You've got to. I said to my clients, you've got to do this trade. If you're wrong, you're wrong. But risk reward, you have to do it. Okay, gold, not looking too good. We've had a great big run up. Everyone knows about that. We topped out in 2011. We've basically been drifting sideways, really. There isn't a pattern to speak of on the weekly chart. If I blow this up a little bit, we're heading back towards the lower end of the range. After we topped out in 2011, you can see we plunged very quickly down to 1535. We dipped below that and got to 1522 just right at the end of 2011. We tried it again in 2012. 1527 was the low. We tried it a few times in, what's this, May. 1527. 1533 in June. So May, June, held it again. So clearly, it's obvious. 1535 down to 1522. You've got support that's held, and at this rate, I think we're going there. We're very oversold on the weekly chart, but not enough to stop us getting down to the low 1530s, the high 1520s. Let's have a look at the daily chart. Daily chart, stochastics are saying nothing. You just can't fight the trend. We're in a downtrend. You can see I put stochastics on here previously. We had a great bounce off here. That's quite a bullish candle where you spike lower but close unchanged. That triggered a rally. We got as far as the first target for the bounce, which was 1612. We got it. We got through it. We got to 1620. What's that low? That's probably around 1620, 1626. Okay, so we overshot that and actually managed to close above it, but the next day very quickly came back below. So anyone who was hoping for that close above the Fibonacci was going to take us up to 1647 the next day. Those hopes were dashed. Stops were triggered, and since then we've just come all the way back. We're now hovering around here. This is the daily chart again, don't forget. So we've hovered here for the last 3 days. We're hovering just below the 9-day moving average. Don't really see any reason why we can't come back down and test 1555 again. Going back to the weekly chart, that's not a particularly big support level. I mean, it could hold 1555, it could hold. If it does, we've got a double bottom, some sort of double bottom, which would be quite bullish, but I wouldn't be surprised to see it back down in the low 1530s or the high 1520s. I can't really say anything else other than that. We're in a downtrend. See what happens at 1555. If we break lower, I would be looking for that sort of high 1530s, low 1530s, high 1520s area. If we happen to hold here and then we happen to get another close above the 1612 area, well then you can start getting bullish again. But otherwise I wouldn't be. Quick look at the 4-hour chart, see if that's telling us anything different. No, not really. Not really. You can see I put a little trend line in here before. We've pierced that today. We've managed to bounce off it. Okay, a glimmer of hope, but I don't think that's any reason to buy it and start getting aggressively long. What would be stop loss on gold? If you're long gold, I guess you might as well have a stop below these lows here, which is sort of 1564, 1565 area. That's a relatively good trade. You can see that 1579 has been a level that's worked quite well in the last day or two. Let me just blow that up a little bit here. 1579, 1580. You know, I'm guessing we'll probably fail around there today if we happen to get through it. I really don't see us getting any higher than 1586, 1588, which has been a big level on my reports recently. And then, yeah, if you're long, if you feel like you have to be long, a stop out below 1564, I think would probably be a good idea, because I really see us heading maybe quite quickly towards 1555 again. Go short from here. Go short from here. Yeah, why not? You could try a short-term short around 1579.80 if you fancied it. You could have a nice tight stop above, sort of 1581, 1582, because if we get through there, we'll probably head up towards 1586, 1588, if I was guessing. But all in all, the chart isn't really telling me anything very exciting. You know, you're really having to go drill right down to the last few hours of action to try and find reason to trade it. But yeah, 1579, 1580 could be worth trying a short there and seeing if it comes back down to 1569 area. The Bollinger Bands, I only use them on the 4-hour chart. I've tried them on the daily and the weekly and longer term, and I don't think Bollinger Bands work brilliantly, but the time scale that it seems to work okay on markets generally is 4 hours. You can see it's sort of held quite well. I wouldn't do a trade solely based on Bollinger Bands, but if they matched up with a moving average level and a Fibonacci level, it would just give me an extra bit of confidence to trade that level. You know, and they're working all right at the moment in gold, certainly. They seem to have pretty much held that move higher when we got up to 1620. And they seem to be holding roughly around the lows that we're seeing at the moment. Okay, let's go back to GBP. Cable. Here we go. How are we doing for time? 30 minutes. Do I follow fundamentals? I really don't follow fundamentals. Before I got into technical analysis, which I originally thought was absolute rubbish, I just thought, how can you possibly look at a picture and tell the future? But slowly I started to read about it. I met someone who was very good at it, and she taught me about it and opened my eyes to it. And she used to make these calls which I just couldn't believe. She called the crash in 2000 when no one was talking about a crash, and you know, she was just right so much that I just had to listen to her. And she taught me, took an interest myself, and just because it seemed to work, I thought, blimey, this works. So I took an interest, and now I don't follow fundamentals at all, because in my opinion, technicals seem to lead fundamentals. I don't know why. Maybe technical analysis is just a measure of demand and supply, so you can already see when demand and supply is changing, and because demand and supply is changing, it's just a news trigger that makes the move eventually come. But from what I can see, more often than not, the technicals lead the fundamentals. And you think to yourself, why would the market turn, or why would the market do something? And then suddenly, boom, the news item comes out and confirms the move that you were expecting. Is there going to be a crash now? Stock market crash? No, I don't think so. If you'd have asked me before we broke 1530 in the S&P, I would have probably said, yeah, I think there's a big chance of it. Right now, I don't see it. I'm waiting for the S&P to get up to that 1574, 1586 level and see what happens there. As we said earlier, I will be shorting it there just in case we do top and have a huge double top pattern. And if that does happen, then the outlook will be horrible, but we'll deal with that when we get to it. Right now, I have to be bullish because we've broken all my resistance levels, so I have to expect a move towards 1574, 1586. My main worry now, in fact, is that we just go sideways in a relatively wide range and don't do anything, which is probably the worst situation of all, because business will die and we'll all get very bored. Okay, we're looking at cable on a weekly chart. We looked at this last week and it was just holding above this trend line, and I was thinking we could get a bit of a bounce because we were looking so oversold. Well, we did get a bounce actually, because I think we were looking at it around here. And we've got a slight bounce, but only as far as the first target, and it's failed. Now we're below this trend line. It's just looking horrible again. This chart goes back to 2010, so it measures the move, the whole rally from May 2010 up to April 2011. And now that we've managed to sink below the 61.8% retracement target, never a good thing. That's now acting as resistance. We're broken below this trend line, from the weekly chart. There's just no reason to think that this is going up. Now I've just flicked over to the daily chart. Again, nothing bullish. Yeah, we got a bit oversold, but so what? That's never a reason to buy it. The 55-day moving average has crossed over the 200-day. The 100-day moving average is heading lower. And look, the 100-day moving average is trading 48 pips above the the 100-day is trading 48 pips above the 200-day. Once that crosses over, everyone's going to be screaming bear market for this again. There's just no reason to buy it. I put some Fibonacci levels on because I like to. We haven't even managed to get up to 153.15, which would be the first target. The second leg of this move lower started at 158.45, which coincides with the 200-day moving average. I stick some fibs on there, and you can see that we did manage a bounce from 149.86. The first target on the shorter term down move was 151.89. That's held it perfectly. What's the high there? 151.99. So failure at the first Fibonacci, not the most bullish move. Back down to 149.86 is looking likely. Don't really see any reason why we're going to hold 149.86. Really, it's looking like 149.49 and then 148.74. Not a pretty picture. I'll just have a quick look at the 4-hour chart in case that says something different, but no. Slow stochastics pointing lower. At best, you would say this move sideways from the 25th of February is just a consolidation of the downtrend, taking time to breathe before we break lower again and moving to the next leg lower. Bad for gold. I'm not really aware of any huge correlation between sterling cable and gold. I've given up looking for correlations really between markets because these days they just don't seem to correlate at all. Energy had a huge collapse very recently, which from what I read was on the back of expectations of a slowdown in the global economy, but then you've got the S&P breaking to ridiculous new highs. I mean, it makes no sense to me. This is why I just look at charts and ignore the news. What am I being asked to look at now? Dollar yen. Yeah, let's have a look at dollar yen. What energies do I trade? I'll have a quick look through energy after this, I think. I look at WTI, I look at Brent, nat gas, gas oil, RBOB gasoline. So I'll have a quick flick through those for you. Okay, dollar yen has just been on a tear higher, as everyone knows. That very clearly shows it. If I spread that out, weekly chart, we've gone from 77.13 up to 94.77 and topped out. We had quite a big plunge back, almost to the first weekly Fibonacci retracement target of 90.61, and we've held just above that. So now what happens? Do we bounce around between 90.61 and 94.77? Possibly. We'll go to the daily chart. I mean, it's very overbought here on the weekly chart, as you see. There's no real pattern here. We basically, this is the daily chart, and as you can see, pretty much from the 4th of February, and through February we went sideways. We had this big down day on the 26th of February, but we've since recovered. It's going sideways really. The longer you go sideways, the more chance that this is just a consolidation of the rally, and the eventual break will be to the upside. We haven't got any particular topping pattern. You can't call that head and shoulders. you can't really, it's not a double top. There's nothing there. It's just trade the range until we break. Either we break below 90, 80, 60, or we break above 94.77. But unfortunately, I can't really say much about it. I was trading this for a little while, but I've given up trading it now because it's just not telling me anything. The last few days we've topped out here at 93.73, so a break above here, we'll probably start going back up towards the mid 94 area, and we'll just have to see what happens there. Could reverse. I mean, it could reverse. It could do everything. I just haven't got a strong opinion on it. The charts aren't particularly telling me anything. Maybe they're telling someone else, but I certainly can see it. Okay, we'll have a quick look at Wti Crude, which is very interesting. Shortest time frame I trade. Yeah, I would scalp a couple of hours if I picked a really good level and it worked and there was a decent profit in it in an hour or two. I would take the profit. That's something I've learned to do. I used to hang on to trade long, see a profit, didn't take it. Very stupid. So I've learned now to take a profit when I see it rather than hang on and get greedy. Not to say that I don't lose money often, as I just did on my S&P trade. Okay, crude oil. There's your weekly chart. Weekly wise, we're actually still sort of in an uptrend. Maybe it's more of a sideways trend, but there's the trend line. This low was 29th of June, the week of the 29th of June. We rallied up, we came down. We haven't managed to match that peak. The weekly chart isn't saying an awful lot, unless we close this week above the trend line, which this week is at 90.11. So let's just go straight to the daily chart. Okay, you can see that trend line a bit clearer now on the daily chart. So we had a big drop. Now this is a drop that I did actually forecast because we got very high, we got ridiculously overbought. We had, on the Fibonacci it was pretty clear, we rallied from 84.05 up to 98.24. We came back, we hit the first Fibonacci target of 94.89, all textbook stuff, little double bottom there. Okay, so that's telling me probably get up and try and retest the highs. We failed with a key reversal day, or a reversal day I should say. That was a higher high, but a close below the previous close. So we've got your double top from the 30th of January and the 13th of February. So that tells you we're probably going to break lower, and we did. It took a little while, but we did break lower. Once we'd broken below the 94.89, 23.6% Fibonacci level, you knew we were going to the 92.82, which we did. We hovered around a bit. We've headed lower again. We're very oversold. We've landed right on that trend line. Not only is it a trend line, it's also 61.8% retracement level of that whole rally up from the end of October. We had to bounce. If anyone follows my reports, you'll know that I was saying that I predicted that to be a low. So far it is the low. We've only managed to go back up to 91.14. So now we're back testing. It would appear we're going to retest this 89.5 area. It's crucial. We're very oversold. There is a chance we hold it. I probably will try a little long position here simply because it's good support. We're very oversold, and if we hold it, we've got a double bottom, and I'd be looking for it to go back up to 91.14 as the first target. And you can have a tight stop. I'll have a tight stop below 89.00 because if it gets below there, then really we're probably looking at 87.96, 87.00. It's going to continue lower. 4-hour chart, what's that telling us? Well, the 4-hour stochastics have turned bearish, having topped where we didn't. Oh yes, that's right. 91.29, 91.40, 91.30, 91.40 was my target. We didn't quite get there. We only got to 91.17. But close enough. It's within 15 cents, and we've come back down again. So yeah, we have to watch carefully what happens in the 89.5 area. Brent crude, if anyone cares, or would you rather have a look at nat gas? Nat gas is a popular one, isn't it? JPY. I've just done yen, which unfortunately isn't going anywhere by the looks of it. Okay, nat gas. Weekly chart, downtrend, which started early 2010 in January. So you can clearly see it's been in a downtrend. We bottomed out in April last year, and since then we've had a nice run back up to this trend line, which I hope you can see. We tried very hard to get above it in November, but couldn't. Came back down. We've then we pierced the trend line, managed to close above it on a weekly basis. Now we've broken below it. We need to move on to the daily chart, but you can see we've rallied back up. So we're testing this long-term trend line again, which, just to remind you, goes all the way back to January 2010. So it's a long trend line. It's been tested a few times. It's something we've got to seriously watch. It's tested again this week, almost to the exact point, and it's holding. So at the moment, it's looking a little bit too risky to be long. Let's see what the daily chart says. You can see the Fibonacci levels are on there already. There's a very small trend line there, which isn't really relevant anymore, so I'll take it off. Yeah. 36.13 is a clear Fibonacci resistance level, and we've got 36.45 just above it, which is the high from the 22nd of Jan. Well, we've backed away from there already. We didn't even really test it. Daily chart's looking a bit overbought. Stochastics are getting ready to turn. It's a bit risky to be long this one, I think. Let's have a quick look at the 4-hour chart. 4-hour stochastics are looking a bit wobbly as well. So we've got our first fib support level at 34.83. If we break below that, we're going to be looking at these lows, which are 34.15, 34.12. Good support. Guessing that will probably hold. Is that going to turn into a short-term head and shoulders? Possibly. Left shoulder, head. If we hold here around the low 34s and then get back up to 34.83, 35.00 and top out again, then you've got your short-term head and shoulders pattern. I mean, we're way off that at the moment, so I'm purely guessing. If that happens, we're going to be looking at sort of 33.00 as your first target, with 33.22, 32.25, very possible. So all I can say for that one is nat gas, bit risky to be long that one now. If you've had it, if you've owned it, let's see what happens. But there is a risk of a sell-off. How long we got? 10 minutes. Have a quick look at Brent Crude. Have I missed any markets out? Okay, Brent Crude, not entirely the same picture as. What are we doing? Sorry, system's very slow today. Thought it looked a bit like WTI. Dollar ZAR. What's that? Is that the rand? Ah, okay. I've never ever looked at that in my life, but I'll have a look for you if I've got time. Okay, Brent Crude, yeah, bit of a different picture. Hard one to read on the weekly chart. What is that? There's no pattern particularly. There's really not much to comment on there. You know, it's just going sideways. The moving averages are going sideways. We've topped out at just below the 1986 Fibonacci. We've come back down. You can see there's a trend line here. We've got support around the 108.5s. There's something on the daily chart that made me get bullish about this. What was it? Oh yeah, it's just that trend line. You can see the trend line going back to where is it? March 2012. So we broke above it. we topped out for whatever reason. We've come back to test it. We bounced off it really nicely. That was where I was looking for a low, which I was writing on my reports. We were oversold, hitting big support, just above a 200-day moving average. I figured good chance of a bounce. In the end, it did bounce. If you look at the 4-hour chart now, you'll see that it recovered to good resistance here. We've got, of the whole move down, the first retracement target is 111.83, which is a 23.6% Fibonacci target. There's the smaller leg down, which started at 115.87. That coincides nicely here. 111.83, 111.98. That was where I had my first target. We overshot it a little bit to 112.23, but you know, quarter of a dollar. I don't think anyone's going to make too much of a fuss about that. We've got time for one more, have we? Oh, well, let's go back to the Aussie dollar. We started an hour ago. Let's see what's happened. Have a quick look at the Aussie and then I think we're done, are we? It's holding on. Four-hour chart. What's it done? Held that level. Look at that. 102.57. Came right down to test the first Fibonacci level at 102.57, and so far it's holding. We're back above the trend line. So we'll just have to see where it closes on the day. I wouldn't be surprised to see it break below there, but that support has worked perfectly at 102.57. I've got a feeling we break that. I think we're done, are we? Thanks very much indeed. Maybe we can do another one next week. If you've got any questions, please feel free to email me and I'll do what I can to answer them. I think the website is on FX Street if anyone wants to contact me. Thanks very much indeed, guys. Thanks for joining me. Appreciate it. I'll try and do another one soon. Thank you.